Welcome traders to this video about the significant importance to looking at a higher time frame chart. The chart you're looking at is a 500 tick chart and it only has one indicator on it, and that is the zigzag ZoneTrader Pro. And the only change I made to it was changing the deviation points to 3. By changing the deviation points to 3, that gives us larger zigzags. Now, this looks like a normal chart until you look at the price scale over to the right and you see that this regular trend trade traded from 28.36 all the way up to 28.44, an 8-point move. And from here, this counter trend trade made approximately 4.5, 5 points itself. So these moves are significant, and this was something that I had looked at 12 years ago and had done and completely had forgotten about until a customer asked me about using higher time frames, and I brought it back and realized the importance of it. What you see on this chart is I have placed the areas of the trade in the circles, and I have put a notation about what the ZoneTrader Pro order flow indicator was giving at that period of time. If you see POCE, that is point of control extension, POCA, point of control absorption, and ZTP is the ZTP order flow signal. And an E all by itself is all we did was create an extension zone. This chart here is based on Monday, August 13th, and I chose that day because it was a normal day to start with, and then approximately 11 o'clock there was a significant news event, and this is going to take us through the day. What is the most important thing to take away from this is that we are going to be using the ZoneTrader Pro patterns and getting a bigger picture view using those patterns. At the end of the video, I'm going to attach 5 slides, and these 5 slides are extremely important, and I would suggest if you are a ZoneTrader Pro user that you snap a screenshot of each one to make sure that you understand each of the 5 patterns that I'm going to show. ZoneTrader Pro naturally identifies 3 of these patterns with the software. However, 2 of the patterns were patterns that were included in the eSignal version of the software when the software was first created. It was taken out of the Ninja version because I was unable to define a good risk reward for those trades. However, in looking at the higher time frame, I see that these patterns are working as they were designed to work, and they represent a trading opportunity, and I will point those out as we go. The first trade down here goes off at 9 o'clock. Pretty routine. We have a point of control extension trade, and without much problems it takes us straight into the blue counter trend zone. At the blue counter trend zone, again a pretty routine entry. We develop a ZTP order flow, point of control absorption, and a point of control extension. That drops us down another 5 points into this support area, and as you would recall, the definition of a trend trade is where we trade to a blue counter trend zone and then we trade to intermediate support. The definition of a counter trend trade is when we trade to a blue counter trend support area and we take a trade from there. Now here's where this becomes interesting and where it requires good judgment on your part. This may be a trade that we're not going to end up taking, and here's the reason why. When you look at it on the big picture, you see that it trades right to the intermediate support zone and the trade begins. However, on a 150 tick chart, which is what I would normally be trading from, what we have here is we have a trend trade that fails, and that trend trade fails by 6 ticks down to this point right here. Now that's unusual, and that's a sign of that something is broken. What happens next is almost what is expected, and that is that we trade to this intermediate resistance zone, and that is a reversal trade. The definition of a reversal trade is a trend trade that fails and then trades back to the intermediate zone here. Now, once it traded to that intermediate zone, we see how we traded back down and then started trading up again in more of a normal pattern once we found support here. The problem I have with taking a trade from this area right here is that while it looks good on the larger time frame chart, we're going to see examples where this is not going to be a successful trade. So if we take a trade from here based only on the extension zone being created, we are by definition then taking a much higher risk for a trade. As the trade continues here, we see a regular trend trade on the smaller time frame chart, and we develop a point and control extension pattern on the ZoneTraderPro order flow signal. That would have been a decent entry at that point. And as we trade higher, we are then presented with a problem, because as we trade up here, we first encounter a point of control absorption and then a point of control extension trade. On the buy side down here, we created a point of control extension, and here we created a point of control extension, and again here. The problem is that we are in the middle of nowhere between this intermediate zone and this blue counter trend zone, and this is going to require a decision on your part. When you see the multiple point of controls being developed, this would be an indication for a possible early exit, but not necessarily a trade entry. However, as we trade higher, at this point here, we develop a point of control extension and a point of control absorption pattern right at the blue counter trend zone. And at that point, we have an extremely valid trade entry. We are going to look to get at least 4 points out of this, as this trades down to the intermediate zone of 28.39. Now, the purpose of this video is not to say all of the great trades that went off today, and there was plenty, but the purpose of this video is to learn something from what we see on the charts. What we see here on the larger time frame chart is we only developed a ZTP order flow. We see that the market did in fact bounce up 2 points into a point of control absorption and extension pattern, giving you an immediate reversal opportunity. However, by looking at what happened here, the move from the high down to the low in the intermediate zone, when we look at that on a smaller time frame chart, this is an area that I again define as high risk. And what happens here is exactly what you would expect to see. You would expect to see that we return to minor and then the selling to continue. And that's exactly what we saw, as identified by the POC extension and absorption trade. So without the development of a legitimate point of control pattern, this becomes again a high risk trading opportunity and doesn't really give us a reason to take the trade off, because at this level, I don't know that the strong trend support here is going to hold. And as we can see in the next down leg, it didn't. It came, touched it again, bounced, and then traded even lower. I don't know that in real time, if I had seen this, that I would have been entering a trade here, but I definitely would have been entering a trade here. The next problem, if we were short, there were no buy signals given during this period right here, which was approximately an 8 or 9 point drop. This is the first buy signal here. And like we just talked about, in a strong trend, it is normal to have a reversal, sometimes to minor. However, in a strong market, in this case, we did not get that. The selling continued and took us down into another strong trend, and again another ZTP point of control. Along the way here, we did have additional point of control extension sell trades. However, I'm only looking at where we would have to make an important decision on, and that would be to cover a short. As the market traded down even further, this would represent probably a very logical exit and possible entry and reversal. I don't know that I personally would be buying after such a big drop, but this is definitely an excuse to get out of a trade. We have formed a ZoneTrader Pro exhaustion trade. We came back down, we tested that, and on that test we developed a point of control extension trade. When we traded up here, we created 2 point of control extensions, and here we created a point of control absorption. And as you can see, this took us down again to the next blue counter trend zone. And again, at this point right here, this would have been the high risk area. This would have been a moderate risk area. And that is where, in that moderate risk area, we developed a point of control extension absorption along with a ZTP order flow. That took us up approximately 4 points to this counter trend zone. And at this counter trend zone, we only developed an extension, meaning that that would have made that a somewhat higher risk if you were going to take that and go short. At the test of the low here, we created a point of control extension trade, traded up, and we traded into a ZoneTrader Pro reversal trade, as you can see from the chart on the right. At the chart on the right, we only create an extension zone again and trade back down to again test that low. So this would be a trade here that would have been a difficult trade once you were in it, and probably would have ended up getting stopped out at. However, down here, this is again at the blue zone, the counter trend zone, and we only develop a point of control absorption. The chart on the right, the smaller time frame chart, that is trading at strong trend support, and that again would make that a high risk entry. However, here on the test of that low at intermediate support, this is where we develop a point of control extension trade and a much lower risk entry. If you took that trade, you were paid well for that. The market went straight up 9 points. There were no ZoneTrader Pro order flow sell signals in this entire 9-point run. Up at the top here, we again see a point of control extension, ZTP, and a point of control absorption. That takes the market down another 5 points. This represents another hard decision for the trader. This is another one of the patterns that I will discuss in the slide at the end. When we trade from blue zone to blue zone, that is a strong trend reversal, because we're saying we trade from a bearish zone to a bullish zone. When we trade from bearish to bullish, we normally only have a pullback to the minor support zone here. And right here at that minor support zone, we've developed a point of control extension trade. However, when we look at the chart on the right, we have exactly the same situation we were faced with at the beginning of the day. We have a trend trade here. That trend trade traded 7 ticks through that zone. This is the reason why, if you entered here, you quickly found yourself underwater as this traded back and forth and did a reversal. At the counter trend support zone here, we initially had a tick divergence pattern develop, as evidenced by the red dot on this bar right here. As it touched the zone, it became non-divergent. But as the market traded down here, we created both a point of control extension and a point of control absorption, making that a much lower risk entry than what we saw back over here. The market traded up another 7 or 8 points, and it traded into a ZTP order flow and created an extension zone up here. On the chart on the right, again, we are trading at, coincidentally, counter trend support. If we ended up taking that trade, we again find this situation where we trade from the high all the way down to the intermediate zone with nothing in between. Look at the pattern on the right side of the chart. Down here at the low, where the ZTP order flow buy signal forms, we see that this is going to be an extremely high risk trade if we're going to take this long. And this is your typical reversal pattern where it trades back up. This case, it stopped 2 ticks short of the intermediate zone. On the higher time frame chart, it developed another extension zone and sold off. This is just the perfect example of why I was cautious and saying that if we were to take something from here on an identical trade at 9:45 in the morning, that this would be a higher risk, and this is the demonstration of that higher risk. Once we've traded through the intermediate support zone on the larger time frame chart down here, we develop a point of control extension ZTP and a point of control absorption. However, again, we do it on the chart on the right with the market in a strong trend. We know we're going to get a pullback, which we do. We're expecting it to go to minor. In this case, it goes about 3 ticks through the minor zone, and then the trend again resumes. Down here on the smaller time frame chart, we trade exactly to a counter trend support zone. That right there on the smaller time frame is an extension trade and a test of the low. The exit from this trade is not as clear as the others, but you definitely had an exit at this point here. I don't think we would have been taking a trade from here. We didn't receive an extension buy signal until here. And on the larger time frame chart, what this pattern is almost to the tick a typical reversal pattern. With that typical reversal pattern on the chart on the right, we see that we have a tick divergence and exhaustion pattern form, and we have extension zones form. Because of the strength of this pattern, this is something that I would classify it as a lower risk because of the extension zones forming and the reversal trading pattern. This takes us down to an area where we could have had possible support, which is the intermediate support zone here. Again, look at the chart on the right, and again we see a trend trade here that has failed, a reversal. This is what should clue you in to keeping you out of making this as a buy from here. As we trade through, we are in a strong trend on the chart on the right. We trade back up. This is expected, and at the counter trend zone we develop a point of control extension trade, which would be a possible area where you could think about adding to that trade. We trade to the end of the day down here. We develop 4 different point of control extension trades down here. The only one that would be a clean entry would be the one directly on the close. Hope you enjoyed this video and understand the importance of looking at a higher time frame. If you have any questions about this, please feel free to give me a call. I will be including the slides on each of the patterns that I want you to understand after the completion of the video. Thank you very much.